Tesla's just posted its worst quarter in 3 years. Sales down 13%, profits off 71%. Tesla stock is reeling, and China's BYD is stealing the show with an EV that charges 250 miles in 5 minutes. Stick with me to the end and we will uncover the 5 forces reshaping electric cars in 2025. Is Tesla's crown slipping? Let's dive in. You won't want to click away. Welcome back to the Fortune Signal, your go-to source for clear, data-driven finance insights. Our content is for education and is not financial advice. Before we jump into Tesla's troubles, let's set the stage. Global EV sales have soared since 2018, but Tesla's market share is slipping. In 2018, Tesla held 20% of the EV market. By 2025, it's down to 14%, while BYD's climbed to 18%. That shift is significant. It's like watching a champ lose their edge. Looming US EV tax credit phase-outs, set to begin in 2026, are also cooling demand for high-end models like Tesla's. This big-picture shift is where our story begins. But those stats are just the start. Here's what's shaking Tesla to its core. Okay, let's zoom into Tesla's rough patch. Here's pressure point 1. Picture a tense morning in Austin, Texas, at Tesla's headquarters. The air's heavy as the Q1 2025 earnings drop. And the numbers hit hard. Tesla delivered 337,000 vehicles, the lowest in 3 years. Revenues down 9%, profits plummeted 71%. That's 71%. Ouch. This year, the stock dropped 25% from January to May. To cope, Tesla's slashed prices on Tesla Model Y and Model 3, cut 10% of its workforce, and disbanded its supercharger team. These moves have squeezed gross margins, now at 14.6%, down from 19.3% a year ago. Former CFO Zachary Kirkhorn warned last year, margin pressure will test Tesla's resilience. That's a warning that stings. One that would make investors nervous and employees uneasy. Globally, Tesla's facing pushback. In Rome, a fire damaged a dealership affecting 17 cars. In London, posters critique Elon Musk's choices. These are the first signs of trouble, our first pressure point. But how did Tesla, the EV pioneer, hit this rough patch? The numbers are tough, but the numbers aren't half as controversial as Musk's next move. Here's pressure point 2. In the early 2000s, when EVs were a long shot, Elon bet big. He invested his PayPal fortune in Tesla. He worked tirelessly and delivered hits like the Model S and Model 3. Tesla became a symbol of sustainability. By 2020, it was the world's most valuable car maker, and Elon was a global icon. But in 2025, his decisions are under scrutiny, our second pressure point. Elon's taken a role beyond Tesla, advising in Washington, D.C. In 2024, he invested $250 million in political campaigns, including Donald Trump's re-election. When Trump won, he appointed Elon to lead the Department of Government Efficiency, or DOGE, tasked with tackling 3 key goals: adopting AI for procurement, consolidating federal agencies, and cutting costs. The role, ending this month, has drawn bipartisan pushback. Some call it government overreach, others much-needed modernization. Some Tesla customers, focused on green energy, feel the brand's mission is misaligned. Public reactions include protests. In Berlin, crowds rallied outside a Tesla factory. Okay, numbers are brutal, but culture hits just as hard. Fans are turning on Tesla, and that's pressure point 3. Dealerships have faced vandalism, like broken windows, and the Rome fire led to increased security in Italy. A 2025 Stifel survey showed Tesla's favorability at 3%, a record low. When I saw that number, I had to double-check. 3, not 30. Another concerning report, Google Trends shows a spike in sell Tesla stock searches during April's earnings week. Analyst Ross Gerber posted, "The brand is broken and may not be fixable." Even one of Tesla's biggest supporters, Daniel Ives, said, Tesla's Q1 earnings is a complete disaster. Investors are worried. New York City's comptroller, Brad Lander, plans to sue Tesla, citing a $300 million pension fund loss due to stock drops from January to May 2025. He argues Elon's focus is divided. The storm's getting wilder. Could Tesla lose its leader? That's pressure point 4. On May 1, 2025, the Wall Street Journal reported Tesla's board was exploring a new CEO. It rocked the industry. Elon called it deliberately false on X. Tesla's chair, Robin Denholm, posted, "Elon is our CEO, and we're confident in him." But such rumors fuel speculation. Who could replace Elon? Tom Zhu, Tesla's operations chief, has scaled China's gigafactory. J.B. Straubel, a board member, co-founded Tesla and leads Redwood Materials. Who'd make the best CEO? Comment below. With the stock struggling, what's driving Tesla's challenges? Elon's responding. He's reducing his Doge role this month to focus on Tesla, limiting DC time to 1 or 2 days a week. But is it enough? Gene Munster on X said brand damage is driving Tesla's sales slump, but he does maintain a positive long-term outlook. If you've made it this far, tap that like button. It helps this breakdown reach more EV fans. The toll hits hard. Tesla's employees who believed in the mission see stock options fading and workloads growing. Investors are pulling back. Lehigh County's pension fund halted Tesla stock buys, and Randy Weingarten urges others to reconsider, citing conflicts of interest. Now here's the big one. Arrivals charging ahead, and that's pressure point 5. China's BYD is coming for Tesla's crown. In 2024, BYD sold 4.27 million vehicles for $107 billion, topping Tesla sales by nearly $10 billion. In Q1 2025, they sold over 1 million vehicles, doubling overseas sales. They nearly doubled Tesla sales in Germany in April 2025 and outperformed Tesla in the UK by a factor of 4. The BYD Blade battery comes in at just $55 per kilowatt hour. Tesla, about $89. That's the kind of gap that keeps CFOs up at night. Their vertical integration, making batteries, motors, and chips, slashes prices, unlike Tesla's reliance on Panasonic and CATL. BYD's DMI hybrid system rules China's smaller cities, powering 60% of their 2024 sales. Picture a bustling BYD showroom in Shanghai packed with buyers. Across the street, Tesla's store is quiet. In China, BYD holds 32% of the EV market, Tesla 6.1%. BYD's planning a US entry by 2026, with feature-rich cars. Analysts call BYD a Tesla challenger, predicting a tight race by 2026, though others say Tesla's innovation keeps it competitive. X posts hype BYD's tech, with some users saying, BYD's got the edge and Tesla's got drama. Tesla's lineup is aging, the Cybertruck's underperforming, and their affordable EVs delayed. Tesla's Q3 earnings are coming with warnings of volatility. But catalysts loom. Tesla Robotaxi launch in June? Likely. Mexico Gigafactory timeline? Slipping. BYD's NAFTA plant? Rumor for now. The board faces a choice. Stick with Elon or pivot. BYD's pushing new models and factories. This is about the EV future. Which brand interests you more? Tesla or BYD? Comment below. This video is for news and educational discussion, not financial advice. If you found this eye-opening, hit like, subscribe for more finance stories. I'll see you in the next one.